currency equals debt. And when you hold a currency, you're holding a debt instrument. And so all of those will decline in value relative to other things. Now, will the dollar decline more than other currencies?
As inflation surges and global markets remain unstable, coupled with the looming threat of war worldwide, the possibility of the devaluation or collapse of the dollar becomes increasingly real. Given this impending crisis, many insightful investors who are concerned about preserving their assets are asking a crucial question: what should one possess in the event of a dollar collapse? It may seem counterintuitive, but not all investments will decline during a global economic downturn. That's why Ray Dalio, a seasoned global macro investor with over 50 years of experience, has extensively researched the economic history of the past 500 years. In this video, you will gain valuable insights into how historical events have shaped today's market and economy. By comprehending these dynamics, you will be better prepared to anticipate and overcome future challenges in your investment ventures. Throughout his 50-year career in international investment, Ray Dalio has made a remarkable observation. We are often caught off guard by unprecedented events. This realization prompted Dalio, the co-chairman and co-chief investment officer of Bridgewater Associates, to embark on a comprehensive study of 500 years of history. In his research, he unearthed recurring patterns shaped by economic turmoil, societal shifts, and global conflicts, decade after decade. This in-depth exploration was essential in understanding the unprecedented occurrences we face in our lifetimes, such as the unprecedented levels of debt-financed spending. Dalio compiled his research for his latest book, Principles for Dealing with the Changing World Order, which profoundly shaped his concerns and perspectives. During an interview on Meet the Leader podcast at the 2022 World Economic Forum annual meeting in Davos, Dalio shared how historical knowledge can assist leaders in navigating the current challenging period and gaining a better understanding of and foresight into future issues. Ray Dalio made a fascinating discovery during his extensive research. He realized that many events that took him by surprise in his lifetime had occurred frequently throughout history. These events include the monetization of debt, which affects inflation and various other aspects.
When there's a lot of debt, one man's debts are another man's financial assets.
Another noteworthy phenomenon is the significant internal conflict between leftist populism and rightist populism, fueled by extreme wealth and value disparities. This internal struggle holds considerable consequences. Additionally, there is a struggle between multiple forces, exemplified by the tensions involving Russia, Ukraine, and NATO. Furthermore, the rise of China as a major power and the relative decline of the United States contributed to various types of conflicts, such as great power competitions. Without a global court or justice system, economic battles in the form of sanctions become prevalent during specific periods. Currently, the United States is imposing sanctions, which can be viewed as a form of economic warfare and carry significant implications for the dollar's strength. A notable shift occurs in the dollar system as various countries seek alternatives.
It's almost certain that we're going to come into this environment. We're in this environment in which there's a shifting of those currencies.
Similar situations have occurred before, such as when the United States froze Japanese financial assets and imposed economic sanctions, resulting in changes to the Japanese financial landscape. Now consider a hypothetical scenario where China, which accounts for 22% of imported manufactured goods in the U.S., faces sanctions. The potential consequences would be significant, leading to inflation, shortages, and overall detrimental effects. In response, tighter regulations may be considered, including implementing capital controls. These developments serve as a reminder of the internal divisions that contributed to the downfall of democracies during World War II, with left and right-wing populism fueling conflicts. As we transition into a new climate, there is a growing allocation of ideological and political resources, leading to increased challenges such as trading limitations and currency exchange restrictions in various areas where these resources are utilized. The combined operation of these three components significantly and negatively impact economic efficiency, leading to increased inflation. Understanding how these components function together and their logical interplay requires an awareness of historical patterns. Throughout history, there has been a recurring pattern of a new world order emerging from a conflict between opposing parties. The victorious side establishes a new domestic and global order, often realizing the benefits of war as an equalizer and eliminating debts. These usher in a period of peace, typically accompanied by prosperity and internal stability. However, during this time, a new challenge to the existing world order arises, often in the form of a rising power like China, along with alliances and geopolitical shifts involving countries like Russia. This rising living standard and wealth cycle create a reluctance to conflict with the dominant power or revert to past hostilities. This pattern can be observed in historical periods such as the Industrial Revolution and post-World War II era. By recognizing these recurring themes, we gain insights into the functioning of the economic machine and its relationship to historical trends. Now, before we continue, if you're enjoying this video so far, let's give it a thumbs up. Feel free to share it with all of your family and friends. And don't forget to subscribe and hit that notification bell to be the first to see our updates. Alright, let's dive right back into the video. Pursuing economic progress and improved living conditions often leads to a widening wealth gap and increased debt levels. As economic disparities grow, it creates different opportunities for those who possess greater wealth, enabling them to exert more influence and provide better support for future generations. Consequently, three recurring outcomes emerge from these circumstances. Firstly, excessive debt burdens individuals and results in financial losses. This means that even in situations where there is insufficient money, debt continues to accumulate. The question then arises, how should this debt be settled? The choices are either to print more money to repay it or to repay it using physical currency. However, printing more money leads to a devaluation of the currency and often results in a decision to opt for inflationary conditions over a depression.
You cannot raise living standards by raising money and credit. In other words, if you increase money, then the value of money is going to go down.
This choice has been repeatedly made throughout history, as we witnessed in 2020 when there was a desire to produce money without limitations. An example of such a scenario unfolded in the 1930s, characterized by the emergence of both left-wing and right-wing populism. These forms of populism were commonly called communism and fascism, respectively. However, regardless of their specific labels, both ideologies represented different manifestations of populism and were ultimately incompatible. These confrontations led to a transformation of four democracies, Germany, Italy, Spain, and Japan, into more authoritarian forms of government during the 1930s. It is important to note that there were variations in the strength of these transformations. In a new world order, the dominant power initially holds significant advantages. For instance, during the mentioned period, the United States possessed 80% of the world's currency, backed by gold, controlled half of the global economy, and possessed formidable military strength. However, the disparities between the dominant power and the emerging competitors diminish over time as competition grows. As this gap narrows, obstacles and challenges arise. Ray Dalio discusses the inefficiencies of governments and the impact of war on the ground. These factors prompt questions about how our daily lives may change soon and the transformations we may witness in the coming years. The relevance of the present moment and its significance as a guide to understanding historical patterns and informing our understanding of current events cannot be understated. 1971 marked the beginning of an inflationary period that persisted throughout the 1970s. We anticipate facing significantly higher levels of inflation and inefficiency in the coming years. These challenges may materialize in the form of intensified supply chain issues. If capital restrictions are imposed, it will limit the ability to transfer money outside of one's own country, whether the United States or another nation. Alternatively, there might be limitations on international money transfers. We have been accustomed to a society where capital, products, and services move freely, creating a world characterized by equal opportunities and the flow of resources based on monetary exchanges. However, in a world without such freedoms, resource allocation becomes influenced by the movement of money, and the opportunities may not be equally distributed. We must remain mindful of the potential for military action, exemplified by the current situation in the Ukraine. Escalation is a possibility, and it may take various forms, including military or nuclear means. Over the next several months, we will gain a deeper understanding of this unfolding situation. Additionally, we will observe the effectiveness of punitive measures to exert influence. Sanctions, currently a distinctively American strength since the United States is no longer the dominant military power that it was, aim to hinder or prevent a Russian victory. It remains to be seen how impactful these measures will be and how they will shape the actions of other nations. Furthermore, we will witness how nations align themselves. Historically, we have seen the emergence of Axis and Allied powers based on various factors and motivations. This process is currently underway, and in the coming months, we will witness the extent of the pressure exerted by the United States on other nations to choose sides. There are ongoing discussions about aligning with a particular faction, and choices will have to be made. Consequently, we will closely observe the formation of these teams and alliances over the next 6 months, or even less as clarity regarding these dynamics unfolds. To leverage historical patterns and navigate the dynamic world successfully, there are specific actions that investors can take. One such action is to employ a strategy of mixing uncorrelated assets in their portfolio. Ray Dalio strongly advocates for diversification, emphasizing the importance of having over 15 uncorrelated investments to lower the risk-to-return ratio. Diversification is a key principle that Dalio considers evergreen, as it enables investors to mitigate risk effectively. The concept of diversification rests on the understanding that assets that are not connected do not move in the same direction, either positively or negatively. For example, there is typically little correlation between the movements of gold and the S&P 500. Therefore, a decline in the S&P 500 does not necessarily impact gold spot prices. Bridgewater's portfolios reflect this approach, encompassing a wide range of assets, industries, and currencies to ensure diversification. Additionally, Dalio acknowledges the use of cryptocurrencies as a tool for diversification. Cryptocurrencies provide an alternative investment avenue that may exhibit different patterns and behavior than traditional assets. Another important action is to sell fully priced equities for a profit. Dalio does not advocate solely purchasing and holding stocks indefinitely. Instead, he recommends selling overvalued stocks to realize gains and then reinvesting those proceeds strategically. This approach involves rotating the portfolio to focus on undervalued stocks, which have the potential to outperform their respective industries or the overall economy. Ray Dalio recommends holding on to the following top stocks: Cisco Corporation, Starbucks Corporation, and Coca-Cola Company. Yeah, you heard it right. Even Coca-Cola makes the list. Warren Buffett, the 6th richest person in the world, has held this stock for a long term since 1988, and it has earned him millions in his portfolio.
Coca-Cola's been around since 1886. There's 1.8 billion 8-ounce servings of Coca-Cola products sold every day.
Coca-Cola is known for its reliable dividend payouts and long-term growth goals, making it a valuable addition to any investment portfolio. It has a low beta, indicating its potential to weather economic storms. Being a long-term investor is key, exemplified by successful investors like Charlie Munger, now a billionaire, and Ray Dalio, who ranks among the top 5 highest-paid individuals on Wall Street. The correlation between volatility and time reveals the advantages of long-term investing. Investments held for longer durations tend to experience less volatility than shorter-term investments. The longer you stay invested, the greater your chances of surviving market downturns. Ray Dalio stands out from other billionaires regarding his opinions on the stock market and the economy. As the co-CIO of the world's largest hedge fund, he lets his actions speak louder than his words. Dalio emphasizes the importance of developing wisdom and improving investment capabilities by maintaining a well-diversified portfolio and being aware of guiding beliefs.
Because what you don't know is a lot. And you can reduce your risk by a lot more than you could reduce your return by knowing how to diversify well.
These guidelines, which he refers to as the recipe, help navigate challenging economic conditions and contribute to achieving financial and personal objectives. Dalio highlights that this knowledge is not new. The economy undergoes cycles similar to other aspects of life. By recognizing and understanding these cycles, we can better equip ourselves to cope with them, like a doctor gaining repeated perspectives on a specific condition. This perspective also applies to the current situation and is not merely theoretical. In one of Ray Dalio's tweets, he mentioned that everyone has assets and liabilities, and the key to success lies in understanding one's flaws and effectively compensating for them. As we conclude this video, if you are determined to excel in the midst of this economic downturn, it is crucial that you make it a must to follow Ray Dalio's comprehensive guide on how to profitably hold assets. We value your opinion, so please share your thoughts in the comments section below. And also don't hesitate to show your support by liking this video and subscribing to our channel for more insightful content. If you enjoyed this video, check out the next one for valuable information.